Right now, thousands of seniors across America are paying hundreds of extra dollars every single month. They are paying these penalties not because they did something wrong, but because nobody warned them. Medicare has hidden traps that can permanently increase your costs for the rest of your life. If you are 65 or older, the next 20 minutes could save you thousands of dollars. Most people assume that once you turn 65, Medicare just kicks in automatically. That is one of the most dangerous assumptions you can make about your retirement. Missing a single deadline or making one wrong choice can trigger a penalty that never goes away. I have seen retirees lose more than $30,000 over their lifetime because of one simple mistake. In my decades as a financial advisor, I watched good people get blindsided by Medicare rules they never knew existed. Today I am going to walk you through every major Medicare trap, penalty, and deadline you need to know. I am also going to share a hidden rule near the end that most seniors have never heard of. Stick with me through this entire video because the information builds on itself in important ways. Let me start with the basics so we are all on the same page. Medicare is the federal health insurance program primarily for Americans age 65 and older.
It is administered by the Centers for Medicare and Medicaid Services, known as CMS. You can find official details at Medicare.gov and CMS.gov anytime you need to verify what I share. Medicare has 4 main parts, and each one has its own rules and deadlines. Part A covers hospital stays, skilled nursing facilities, and some home health care. Part B covers doctor visits, outpatient care, and medical equipment.
Part D covers prescription drug plans, and Part C is Medicare Advantage, which bundles everything together. According to CMS.gov, the standard Part B premium for 2025 is $185 per month. That is the baseline amount most seniors pay, and it comes directly out of your Social Security check. Part A is premium-free for most people who paid Medicare taxes for at least 40 quarters. But here is the critical detail that trips people up every single year. The enrollment windows for Medicare are not flexible suggestions from the government. They are hard deadlines with real financial consequences baked into federal law. Think of it like a train schedule, where the train leaves at a set time whether you are on it or not. If you miss it, the next train costs significantly more, and the extra cost never goes down. According to the Social Security Administration at SSA.gov, approximately 66 million Americans receive Medicare benefits. Every year, a significant percentage of new enrollees make at least one enrollment mistake. These mistakes generate penalties that add up month after month for the rest of their lives. The system does not send you a warning letter before these penalties hit your account. Now let me dive into the first major trap that catches more seniors than any other. This is the Part B late enrollment penalty, and it is absolutely devastating to your monthly budget. If you do not sign up for Part B when you are first eligible, you will pay more forever. I am not exaggerating when I say forever, because this penalty has no expiration date. Your initial enrollment period for Medicare begins 3 months before you turn 65. It includes your birthday month and extends 3 months after your birthday month. That gives you a total 7-month window to sign up without any penalty. If you miss that entire window, the clock starts ticking on your late enrollment penalty. The Part B late enrollment penalty is calculated at 10% for every full 12-month period you were eligible but did not enroll. Let me put that in real dollars so you can feel the impact. If you delay Part B enrollment by 2 years, you pay a 20% surcharge on your premium permanently. Based on the 2025 standard premium of $185, that is an extra $37 every single month. Now, $37 a month might not sound catastrophic at first glance, but let me show you what happens over time with that penalty. Over 10 years, that 20% penalty costs you $4,440 in extra premiums. Over 20 years, which is realistic if you enroll at 67, it costs $8,880. Some people delay enrollment even longer than 2 years, and the math gets truly painful. A 3-year delay means a 30% penalty, which adds $55.50 per month. Over 15 years of retirement, that one mistake cost you nearly $10,000. I have personally seen clients who delayed 4 or 5 years and faced penalties approaching $100 monthly. Here is what makes this trap especially cruel for people who did not understand the rules. The penalty is recalculated every year as the standard premium changes. When the standard Part B premium goes up, your penalty amount goes up right along with it. So the actual dollar amount you pay in penalties increases over time, not just stays flat. Let me give you a concrete example that I have seen play out many times. Imagine a woman named Susan who retired at 63 with employer health coverage. Her employer coverage ended when she turned 65, but she forgot to enroll in Part B. Susan did not realize her mistake until she was 67, a full 2 years after her initial enrollment period. Susan now faces a 20% late enrollment penalty on her Part B premium for life. In 2025, that means she pays $222 per month instead of $185. She also had to wait until the general enrollment period from January through March to actually sign up. Her coverage did not begin until July of that year, leaving her uninsured for additional months. During those months without Part B coverage, Susan needed an outpatient procedure that cost $4,000. Without Medicare Part B, she was responsible for the entire bill out of her own pocket. If she had enrolled on time, Medicare would have covered 80% after her deductible. That single procedure plus her lifetime penalty could cost Susan well over $15,000 total. The most heartbreaking part of Susan's story is that it was completely preventable. If someone had simply told her about the enrollment deadline, she would have signed up on time. That is exactly why I make these videos, to be the person who tells you before it is too late. Knowledge about these deadlines is worth thousands of dollars to your retirement security. Stay with me, because what I am about to show you will surprise you even more than the Part B penalty. There is another Medicare penalty that many seniors do not discover until they are already paying it. This next section covers the Part D late enrollment penalty for prescription drug coverage. If you think Part B penalties are bad, wait until you see how Part D penalties compound over time. The Part D late enrollment penalty works differently from Part B, but it can be just as costly. This penalty applies if you go 63 consecutive days or more without creditable prescription drug coverage. Creditable coverage means drug coverage that is at least as good as a standard Medicare Part D plan. If you do not have creditable coverage and you do not enroll in Part D, the penalty starts accumulating. According to CMS.gov, the Part D late enrollment penalty is calculated based on the national base beneficiary premium. For 2025, that national base beneficiary premium is $36.78 per month. The penalty is 1% of that base premium multiplied by the number of full months you were without creditable coverage. That might sound small, but it adds up much faster than you would expect. Let me walk you through the math with a real-world example that I have seen too many times. Say you went without creditable drug coverage for 24 months after your initial enrollment period. Your penalty would be 1% times $36.78 times 24 months. That equals $8.83 over 15 years of retirement. You are looking at $1,589.40 in extra costs. And just like the Part B penalty, this amount adjusts upward as the base premium increases each year. A gap of 36 months pushes your penalty to $13.24 per month. Some seniors tell me they did not sign up for Part D because they do not take any medications. I completely understand that thinking, but it is a financially dangerous gamble. The odds of needing prescription medications increase dramatically as you age. By the time you are 75, there is a very high probability you will need at least one regular prescription. If you waited 10 years to sign up because you felt healthy at 65, you could face a penalty of over $44 per month. That is on top of whatever monthly premium your chosen Part D plan charges. Over the remaining years of your retirement, that penalty alone could exceed $10,000. The irony is that the Part D plan itself might have only cost $20 to $30 per month from the start. Here is another detail about the Part D penalty that catches people off guard. The penalty is added to your premium for as long as you have Medicare drug coverage. There is no forgiveness period, no amnesty program, and no way to negotiate it down. Once the penalty is calculated and applied, it follows you through every plan change you make. I had a client named Richard who worked past 65 and had employer coverage that included drug benefits. When he retired at 68, his employer drug coverage ended at the same time. Richard signed up for Part B within the special enrollment period, so he avoided the Part B penalty. But he waited 6 months to pick a Part D plan because he was overwhelmed by the choices. That 6-month gap cost Richard a permanent monthly penalty on his Part D premium. He was stunned to learn that even a gap of just over 2 months could trigger the penalty. Richard is now paying an extra $2.21 every single month for the rest of his life. It is not a huge sum, but it is money he did not have to lose. The lesson from Richard's experience is crystal clear for everyone watching this video. When your creditable drug coverage ends, you need to enroll in a Part D plan immediately. Do not wait to compare every plan on the market for months while your penalty clock ticks. Enroll in any plan to stop the penalty, then switch during the annual enrollment period in the fall. Now here is the part most seniors never hear about, and it involves Part A of Medicare. Most people believe Part A is completely free, and for the majority of Americans it is. But if you or your spouse did not work at least 40 quarters paying Medicare taxes, you actually have to pay a Part A premium. And yes, there is a late enrollment penalty for Part A as well. According to CMS.gov, the Part A premium for 2025 can be as high as $518 per month. That is for people who worked fewer than 30 quarters of Medicare-covered employment. People who worked between 30 and 39 quarters pay a reduced premium of $285 per month. The late enrollment penalty on top of these amounts makes the situation even more expensive. The Part A late enrollment penalty is 10% of the premium for twice the number of years you could have had Part A but did not sign up. So if you were eligible for 2 years but did not enroll, you pay the 10% penalty for 4 years. Unlike the Part B penalty, the Part A penalty does eventually expire. But during those penalty years, the added cost can be extremely burdensome on a fixed income. Let me walk you through a scenario that illustrates how all 3 penalties can stack up on one person. Imagine a senior named Margaret who worked part-time most of her life and only accumulated 35 quarters. She missed her initial enrollment period by 18 months because she was caring for a family member. She also did not sign up for Part D during that same period. Margaret now faces the Part A reduced premium of $285 per month with a 10% penalty. Her Part B premium is $185 plus a 10% late penalty of $18.50. Her Part D has an additional penalty of $6.62 per month on top of her plan premium. Margaret is paying over $500 monthly just in Medicare premiums and penalties combined. If Margaret had enrolled on time, she would have avoided approximately $25 per month in total penalties. Over 20 years of retirement, that $25 per month in avoidable penalties costs her $6,000. And remember, those penalty amounts increase as premiums rise each year. So the real cost is even higher. Margaret's story is, unfortunately, more common than most people realize. Now I want to address one of the most misunderstood situations in all of Medicare enrollment. This involves people who are still working past age 65 and have employer health coverage. If you have coverage through your own employer or your spouse's employer with 20 or more employees, you have special rules. Understanding these rules can save you from paying penalties you should never have owed. When you have employer coverage from a company with 20 or more employees, you qualify for a special enrollment period. This means you do not have to sign up for Part B during your initial enrollment period at 65. You get 8 months after your employment ends, or your employer coverage ends, whichever comes first, to enroll penalty-free. This is one of the most important exceptions in all of Medicare rules. However, this special enrollment period only applies to coverage from current employment, not former employment. COBRA coverage does not count as current employer coverage for the purpose of this exception. Retiree health plans also do not count, even if they come from your former employer. If you rely on COBRA or retiree coverage and skip Part B, you will face the late enrollment penalty. I cannot tell you how many times I have seen someone continue on COBRA after retiring at 65. They assume SOBRA protects them from the Medicare penalty because it is employer-related coverage. They are shocked when they discover that COBRA is considered continuation coverage, not current employer coverage. By the time they realize the mistake, they have accumulated months or even years of penalty liability. Let me also talk about what happens when your employer has fewer than 20 employees. If your company has fewer than 20 workers, Medicare is your primary insurance starting at 65. Your employer plan becomes secondary, meaning it only picks up what Medicare does not cover. In this situation, you absolutely must enroll in Medicare Part A and Part B at 65. If you work for a small employer and do not enroll in Medicare at 65, your employer plan may not pay your claims. You could end up with enormous medical bills that neither Medicare nor your employer plan covers. This is one of the most expensive Medicare traps that exists, and it affects small business employees disproportionately. Always verify your employer's size and check with your HR department before making any Medicare decisions. Here is where I want to share a critical enrollment deadline that trips up thousands of seniors annually. The general enrollment period runs from January 1st through March 31st each year. If you missed your initial enrollment period and do not qualify for a special enrollment period, this is your window. But coverage does not start until July 1st of that year, leaving a potentially dangerous gap. During that gap between enrollment and coverage start, you have no Medicare protection for medical expenses. An unexpected hospitalization or emergency during those months could cost you tens of thousands of dollars. This is why it is so crucial to enroll during your initial enrollment period or special enrollment period. The general enrollment period is a safety net, but it is a safety net with significant holes in it. Now I want to reveal the hidden gem that most seniors never learn about, even from their own insurance agents. There is something called Medicare savings programs, and they can eliminate your Part B penalty entirely. These are state-run programs funded by Medicaid that help low-income Medicare beneficiaries with their costs. If you qualify, the program pays your Part B premium, deductibles, coinsurance, and co-payments. There are 4 levels of Medicare savings programs, and each has different income limits and benefits. The Qualified Medicare Beneficiary Program, or QMB, covers the most and has the broadest eligibility. For 2025, a single individual may qualify with a monthly income up to approximately $1,415. A married couple may qualify with combined monthly income up to approximately $1,915. The Specified Low-Income Medicare Beneficiary Program, or SLMB, covers your Part B premium only. The covers Part A premiums for certain working disabled people. Each of these programs has asset limits in addition to income requirements which vary by state. Here is what makes these programs a true hidden gem for seniors paying late enrollment penalties. If you qualify for QMB, SLMB, or QI, the program pays your Part B premium including the penalty amount. That means your late enrollment penalty essentially disappears because someone else is paying it for you. Even if you made an enrollment mistake years ago, these programs can erase the financial damage. Many seniors who qualify for Medicare savings programs never apply because they do not know they exist. According to CMS, millions of eligible beneficiaries are not enrolled in programs they qualify for. There is no shame in applying for benefits you have earned through years of paying taxes. These programs exist specifically to help seniors on fixed incomes afford their Medicare coverage. Now, let me give you the exact action steps you need to take today to protect yourself from every trap I have described. First, go to Medicare.gov and log into your account, or create one if you do not have one yet. Check your current enrollment status for Parts A, B, and D to make sure everything is active. If you see any gaps or pending penalties, note them immediately so you can take action. Second, call Medicare directly at 1-800-633-4227 to ask about your specific situation. Representatives can tell you if you have any penalties on your account and explain your options. They can also help you understand if you qualify for a special enrollment period based on your circumstances. Have your Medicare number and any employer coverage documentation ready when you call. Third, contact your state health insurance assistance program known as SHIP for free personalized counseling. SHIP counselors are trained volunteers who help seniors navigate Medicare decisions at no cost to you. You can find your local SHIP office by visiting shiphelp.org or calling 1-800-633-4227. They can help you apply for Medicare savings programs and check whether you qualify for premium assistance. Let me quickly recap the most critical points from everything we covered in this video today. The Part B late enrollment penalty is 10% for every 12 months you delay, and it lasts forever. The Part D penalty is 1% of the base premium per month of uncovered gap, and it also lasts forever. COBOB dear. To 1% joining and generobly to ever skid generobi, that giving your pre-tud, you can pin your nangermi tours to may you are come do. The nake and no my maray here your gap, your keek you, your go, ever your be dear. In Jumberday Medicare penalties and deadlines, to bay us do pleopors well bree to pummer gap, you can tan your gap, your pan. So fenshay you paken your gap, 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 your say. Next time I